Hello and welcome to the Bullion Market June Research Update. My name is Greg Ross and we have an exciting lineup for you today. To start with, we welcome Robert Jamison, General Manager, and since we last talked, a lot has been happening with your company. Can you please bring us up to speed with what has been happening?
Thanks, Greg. Look, it has been an amazing period of time. Always in the back of our mind we were going to roll the company out into different areas, but that's been accelerated. We have found that our bullion investors have been seeking more information on the products and how to enter into this particular market, and so we've now moved from just the execution platform that we've been using to where we actually have got expert bullion consultants just to assist people who are not sure about how to go into this area. And that will give the human touch, I guess, rather than just the computer touch to our relationship with our clients.
So you're moving into a more professional service offering rather than an execution-only type platform.
That is correct. And that's probably been brought forward because we've also expanded on what we're offering. Up until now, we had just gold and silver because everyone was actually familiar with that. But now the other two precious metals, platinum and palladium, are also available through us. And so with these two precious metals, which a lot of people are not aware of, but once they see the charts and where they are heading, they just get really excited. So our branding is about covering all the precious metals.
Well, we'll be going through all of those. Turning to the market, it's certainly been exciting with the recent turnaround in the equity market, which was forecast by your team and also by Harry Dent.
Amazingly so, Greg. When I look back over those reports that we got some 6 to 8 months ago and just see how they're actually unfolding as like it was written as a script, it's amazing how they've been able to do it. But the one big surprise in this, which those investors who looked at the last update will know about, was that we believed that there would be problems with the Treasury bills, and that was predicted to be about towards the end of this year. But already the US has actually started buying back their own Treasury bills.
Okay. For the benefit of those watching now, can you go through that chart that you showed us last time?
Thanks, Greg. Yes, this is probably the way that I personally have been able to get my head around it, because when you just read it, it's incredible. The US, to fund their national debt, actually have the Treasury bills. The biggest buyer of these Treasury bills up to now has been China. China, in return for the goods that they've been sending into the US, has actually been taking these Treasury bills back, basically as an IOU for the payment of those goods. Hence, their currency has stayed very, very low. But China has already announced they're no longer prepared to do this because they are already concerned, as the biggest holder of Treasury bills in the world, that they are being rapidly devalued as the US prints more and more money.
Okay, so what then happens to the US dollar? What will be the impact on that?
I guess the words that people don't like to use is massive devaluation. And this next chart probably gives us an overview of where we're actually heading. If we had a trolley of food, for example, and the value of that prior to all the stimulus packages that Obama has rolled out, let's say it was $15.50 we've used on this chart. Currently, that same basket of goodies, $28.24. And as you go down that chart, as the amount of money the US print and put into circulation, the actual amount of money you need to buy the same amount of goods is getting greater and greater. It's scary.
So how does this affect what you're dealing with?
Well, we love it.
The gold, silver, now?
Platinum and palladium, yes. Because what it means, people no longer trust printing money. We will go back to the commodities of history, gold, silver, and now the more modern ones, platinum and palladium, which have real value. They actually have an intrinsic value. It's not a debt-laden product.
So if your dollar can't buy as much now as it used to, why haven't we seen this devaluation happen immediately?
It's all around a thing called the velocity of money. And we're fortunate at the moment, while that last chart shows the effect, it's coming through very, very slowly. And it's going to be like a very slow cancer just rolling out. But we will get to the point, everyone will go, oh gosh, that is worthless money. And the post-Second World War, Germany, where you needed a bucket of money to buy a loaf of bread, that is highly probable in the near future. But at the moment, the velocity of money is calculated to be around about 12 to 18 months. So we're not seeing big jumps, but it's happening.
Okay, you mentioned China. Who else are the major holders of this national debt?
As this next chart shows, you look at the amount that China and Japan hold, and then you go down through the rest. Those two big players really do hold they own America, I guess is how you look at that. That's basically. And so they've said no more. So America has to now buy back their own treasury bonds, because they've already promised they're going to roll out another, up to $10 trillion worth of approved extra spending. So we've got a really serious problem that we will possibly get to that day. We don't know when, where people will say, no, we don't want to play with your US monopoly money.
So there's a lot happening.
Thank
you. Thanks for that up-to-date information, and we really appreciate that.
Thank you.
There are definitely plenty of opportunities to capitalise on a strong performing segment of the marketplace, and it's good with all the bad news around that these segments are running very hot. Also in Wealth Creator magazine, Bullion Market provides the expertise, and there's an article in the May June edition which we recommend. I also suggest you visit our website on www.bullionmarket.com.au, where you might like to speak to one of our consultants. Just call 1300 073 886. 1300 073 886. Happy investing.